Hi, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. I don't know why I'm speaking so fast.
I don't either. We got plenty of time. Plenty of time here, man. The tender volume index continues to move horizontally. However, the tender rejection index has now fallen down below where it had the lowest point of the year, 20.28%, slightly below where it was at the end of July and slightly below where it was at the end of January.
Capacity crunch is over, man.
Yeah, right, at 20.28%. Still extremely high, still only slightly lower than it was this time last week.
Yeah.
So not a huge significant change in the market. However, if we look at the spot market, or the spot rates on our next chart here, to look at what has been going on there, we are seeing a slight horizontal to downward pressure on these spot rates. A little bit of easing going on in the market right now. Not a tremendous amount. Like I said, $4.10 per mile.
Yeah.
If you go back historically, we're well above.
Yeah, I know.
Anything that we've been. Van spot rates $3.43 all in, according to Truck Stop's Top 100.
Yeah.
Flatbed just a skosh higher there. We're kind of floating right now. We're floating on this really high level, this plane of existence, if you will. And there's just not a lot
Very existential.
Yeah, there's not a lot of aggregate movement right now for the time being. However, if we go into the map, we'll look and see where in the United States we are seeing some of these undulations and changes that are driving this flatness. So weighted rejection index here, blues indicate tightening, oranges indicate loosening. The largest markets in the country right now, not ignoring Nashville, my hometown, but the Ontario, Dallas, Elizabeth, Chicago, showing some of the most significant. Atlanta not showing up on this map just yet.
Lots of volume, though.
Lots of volume. The taller the market here, the more outbound volume there is. But these large markets are driving that decline as of right now, this week versus last week. So tender rejection rates week over week, showing some easing signs versus this time last week.
Yeah, some of them are sucking capacity from other markets around them, and some of them are.
Well, these are also traditional. These are carrier magnets.
Yeah, no, they are.
Yeah,
no, it's the easiest, obvious ones. Where do you go? You go to Elizabeth. Where do you go? You go to Ontario. Absolutely.
Yeah, talking to David Bradford this morning about like trying to find a carrier, for a broker sitting out there. Well, telling about his son trying to identify, find a carrier coming out of Chicago. It's like, yeah, there's tons of carriers in Chicago, but if you're trying to get somebody that's going to give you a good deal, you look at some of these smaller markets out here. More than likely because they're backhaul, except if they're in the blue on this map.
The other volumes are pulling them out of there.
Exactly. So, it's like you said before, Maryland tightening week over week doesn't mean that it's absolutely tighter than everywhere.
No,
it just means week over week we're seeing some tightening signals. So if you were operating out of this market last week, you're going to see a little bit more upward pressure on those spot rates.
Sure.
Memphis, pretty decent sized market, little upward pressure. Columbus, giant market.
Yeah.
A top
and what's
5 market.
Is that Indy next to it?
Indianapolis next to it. Let's look at the tree map and just put some numbers on this.
Okay, let's do that.
A little bit here. So we've got all these. This is basically the numbers that you saw on the map. Ontario, Dallas, Los Angeles, Elizabeth, Allentown, all some of the largest markets. Milwaukee, Wisconsin, showing a pretty big easing sign. Do not try to get in there and get the same rate that you got this time last week if you are a carrier.
In Milwaukee?
In Milwaukee. It will probably see a little bit of a downward pressure versus last week. And then over there on the tightening side, Salt Lake City, Indianapolis, Baltimore.
Yeah,
showing
absolutely.
Some of this. Let's look at the charts of some of these moving up next.
Very
so
nice.
This is our outbound tender market share over here. Just in case people aren't super familiar with, when we say like, hey, these are the largest markets in the country, this is market share in a tree map. The largest markets sitting up here: Ontario, Dallas, Elizabeth, Los Angeles, Allentown. These are all showing the big easing signs, and they're
That's where it's coming down. And those that are tightening. Columbus tightened at 0%.
Well, no, that's the market share. Market share rose.
Oh, yeah, that's
0%.
Right, 0% change in the market share. Sorry about that.
This is a volume indicator, relative volume indicator. These are going to be your smallest markets that you can't even read, but these are all your biggest markets. And we looked at our easing markets.
Gotcha.
You got Ontario, Dallas, Allentown, Elizabeth. You see these rejection rates. Especially Allentown, dropping from about 25% just a few weeks ago all the way down to 20%. That's a significant move downward. All of them are showing a pretty decent sized drop, especially Ontario down around 15%, close to its annual low.
Yeah, of these here, Allentown's the only one above 20 right now. So that's some significant.
The largest markets getting capacity.
Absolutely. Yeah. Well, yeah, that's where everybody goes. So, yeah, the magnets. Thank you so much for that, Zach.